Now, since that's done, let's go to step number 2, okay, what I wanted to cover today. How to anticipate and draw patterns. Now, I love patterns, okay? To me, I like teaching in my class. I normally tell my students, if you look at patterns like this, okay? The market is a blank canvas, okay? This is a blank canvas. So you can look at them, you can normally break down the market into 2. You're looking at it through an artistic side of view or a science side of view. Science is fixed, artistic is more or less kinetic. It's changing, it's always evolving, okay? Now, what's happening here, the market, there's a time, now this, if you look here, this is April, this is around May, this is June, and this is July, towards the end. Towards the end, market will eventually come and paint itself on this canvas, okay? So the market is a painter, and we're observing what the painter is doing. There's a time during back here in December, it was empty. But since it's in the past now, market has already painted on it. The market has painted. So the market is a painter. So my work is to observe the painter and try and anticipate what the painter is doing through certain consistent patterns that I normally trade in order to anticipate whether he's going to paint towards the upside or paint towards the downside. That simple, okay? Don't complicate things. The market is either going to go up, down, or sideways. Now, our work is just to observe and to anticipate. Don't try and forecast. Don't confuse the two. I'm not trying to be a forecaster. A forecaster is someone who's telling you, for example, where the market is over here, this market is going to move up, wait and see. If you ever hear someone saying such a thing, just know this is someone who's very new to trading. They might have an edge or something. Maybe they have an inside information or something. But 100 times, if they do it 100 times, they're going to be wrong more times than they were right, okay? You can be very lucky. You can come here and tell someone, you know, I've analyzed this market. It's going to go up from this point. Luck can be on your side. We like talking about this with Ken and Taras. Luck plays a big role in trading, just as it plays a big role in gambling. And it can easily go in your direction and you make a ton of money. But try and do that 100 times, you, my friend, are going to be on the losing end, okay? So as I was saying, market is a blank canvas. So for me, I like analyzing and looking at chart patterns. I'm big on chart patterns. I'm big on candlestick patterns. I'm big on basically what the market is telling me. I'm not trying to tell the market to go up. I'm not trying to pray. I'm not going on my knees and telling the markets, please go up. I just bought down here. I really want you to go up. No. I read what the market is telling me, and from understanding what you're reading, you can interpret that, and it's going to tell you 3 things. Can I buy? Yes. Can I sell? No. Can I wait? Yes. So it's going to tell you those 3 things. Either buy, sell, or stay out of the market. Okay? That's basically why you're doing chart analysis. You're looking for turning points. Not even a must, you're looking for turning points. Some people are looking for momentum trades, meaning the market has started going with the momentum, they're buying into that momentum. So it just depends on what you're doing, okay? I'm very systematic, so I follow a certain way of how I'm looking at markets. So for me, I come from the perspective or the school of people who love market structure. I like saying, to me, market structure is beautiful. If you listen to my analysis, I like saying, look at that beautiful move. Market did what the market was expected to do. We anticipated this, and the markets did as we expected, okay? So as a rule of thumb, what I want to share with you guys, how I look at markets will always move with the basic movement of ABC, okay? All markets, I don't care which market, be it Bitcoin, be it US bonds, be it commodities, currencies, indexes. I don't care which market you're trading. Market will always move up, down in an ABC pattern, okay? Now, what does that mean? If we're going in an uptrend, market will always move like this, A, B, C, okay? Markets will always go up like that. And when it's going down, market will always create A, B, C, okay? It's always going to move like that. If it's in a downtrend, ABC. If it's in an uptrend, ABC. A bullish ABC, bearish ABC. Now, multiple of this is what is going to create a downtrend. Now, if it starts doing like this and going like that, now multiple of them, multiple ABCs to the downside creates a downtrend, okay? And vice versa. It's simple, okay? There's my tool. And vice versa, look at this. If market is going to the upside, simple. So we're just going up, down, up, down, up, down, okay? Basic. That's very basic, okay? Markets are going to move in an ABC sort of pattern, okay? Now, these ABC patterns are what creates the bigger pattern, okay? I don't care if you're trading a flag, if you're trading a triangle, if you're trading a head and shoulder, if you're trading, what else is there? There's so many patterns. Any pattern you're trading is going to be formed by an ABC, okay? Be it a correction, be it an impulse. If you go and break it down, if you move from the daily chart down to the 4-hour chart, down to the 1-hour chart, you'll see that the market is just being made up of ABC, ABC. And you can go this until the 1-second chart, okay? I don't think any of us does the 1-second chart because it just really doesn't make sense. Even to me, a 1-minute time frame doesn't make sense. I want to see something more significant, okay? Like a 1-hour chart and a 4-hour chart. But in a basic level, every pattern, every movement in the market, everything is moved or is created by an ABC pattern, okay? So now when I'm looking to look for my patterns, okay? For example, now let's talk about flags, let's talk about trend lines, let's talk about triangles. I want to cover trend lines first. How do you draw trend lines and how do you draw it in a right way? So there's no one way of how to do this because I found many of my students asking me, do you use the wicks? Do you use the body? Do you use the what else can you use? I don't think you can use anything else when you're drawing a trend line. You can either use the wick or the body, okay? So let's look at a pair. Let's look at a pair. I want a pair that's trending. Let's look at something like a gold, okay? Now for me, for example, I'll normally look for a trend that starts from the highest high, okay? Now, if you look at this is the daily chart. So also time frame, very important. Over here, for example, market was moving up, went and created a new high. If you remember that time, markets hit 2070, 2071, 70, around there. Let's say 2065, and market started turning. Now for me, when markets came, remember, a trend line can only be drawn once you have 2 turning points. You cannot draw a trend line before having 2 turning points. It's impossible, okay? So for example, you have this. Now over here, there's no trend line. Now notice that. You can only know a trend line when you have 2 turning points and market went to a new high if it's in an uptrend, okay? For example, like that. Now, over here, we can get a trend line. How do you do a trend line? You take this starting point, draw there, straight like that, you get that turning point. Now you have a trend line. Now this trend line, you're anticipating that market can come and bounce off a 3rd time, okay? And then we go up, maybe even come and 4th time, then go up, then maybe even come and break below, come back and retest it, okay, and then go down. So that's what a trend line is all about. Let me ask this question, then you guys can answer me in the chat room. I'll answer it towards the end. I was asking one of my all my students, when I'm showing them patterns and teaching them how patterns work, which one is more important, the price action or the trend line? Like when I'm drawing this, which one is more important? Is it the price action, what I'm seeing, the lower lows, lower highs, lower lows, lower highs, or is it the trend line? So answer me that, and I'll answer towards the end, okay? Most of my students will answer that correctly because I've already told them. So for example, let's take this as a top, okay? So sometimes I'll take a mean, okay? Let's zoom this before I draw my trend line. So sometimes I can take a mean, okay? For example, I can come here and decide, okay, let me take this middle point instead of the highest point. So I'll try and just take the mean, the middle part, okay? And do like that, okay? And then draw like this. Now notice how I'm passing the second trend line, okay? Sometimes you can use the body. You can use the body like, the wick. You're using the wick. That's the farthest point. That's like a really high point on the trend line, okay? But if you do that, look, for example, now this is where markets are not perfect. You can never get this right. Market came here, turned somewhere here and moved to the low. But if you come and use the body here, you'll come and see that market actually turned here. Now look at that. You see that? Now I'm using the body. I'm using a mean here. I can use the high point if I want, okay? Now that's where markets are not perfect. There's no one way to draw this thing. I can use that. You never get it right at any time, okay? You can get it right, yes. I don't mean you'll always be wrong. But if you are using the highest wick there, markets went to the opposite side. But if you're doing this, markets have come and actually turned on your body. It went to a new low, came and created a new high. Many people are fooled here. Now look at this. Okay, so these are just a few things that trick a lot of people. Look at that. A very good indication for a sell. It's sort of like this one. Okay, look at that one. Immediately people entered a short. What happened? Market squeezed them just to hit their stop losses, then went further down. Now if you come and use the wick, if you use this a bit differently, now let's adjust it a bit. Now you can see market. Now if you use the higher wick, okay, now you can see how market came and bounced off that level. If you extrapolate it, look how market came and bounced off again, created a double bottom. Very important pattern, okay? Very important pattern. I'll talk about this in another video because the question that begs when you're looking at when a market is coming to create a bottom or a top or like a double top or a double bottom, you should ask yourself the question, how is the market approaching that level and how are we respecting it? So I'll cover that. I think I have it towards the end as the bonus. Now look at this. Market eventually came and broke above. Market has gone all the way back up, okay? So when you're drawing trend lines, when you're drawing patterns, okay, there's no one way to draw it. And I don't think there's a book that says this is the mandatory way of how to draw a trend line. Which is mandatory, which is important, is what I've told you. You need to look for 2 turning points and then get a trend line. Before that, you can never predict where market is going to turn, okay? For example, now over here, you have a trend line. If you take this as the lowest low, okay, take this as your turning point. Because now we have seen market has moved high, created a higher low. It's gone to a new high. Now you have a long-term trend line. Now remember, this is the daily chart. So you can do this towards all time frames. I don't want to get deep into that, but all time frames, that can help you do that, okay? Now, that's fast. Now, I've just shown you how to use trend line. The reason why I've shown you that is because now I want to enter into things like flags and triangles, which is basically just using trend lines to get the same patterns, okay? So what's a flag? A flag is a basic pattern that I trade a lot with my students, okay? How does it look like? It's when market has impulsed, mostly in the direction of the trend. Then you're looking for a correction in the form of a flag. A flag looks something of the sort, and then market impulses to the upside, okay? So if I use my channel tool, if you come here, you have your tools. There's this parallel channel, that's what I use, okay? If I click on it, come and draw here, you need these 2 turning points, okay? The corrections, okay? Use that, and then it will create a parallel line which I'm using to draw to the downside to anticipate the market coming and touching this level, okay? And then we look for a buy at this point. So that's a channel, okay? That's a flag, okay? That's a flag. By the way, don't confuse the two. A channel and a flag, 2 totally different things. I'll cover that in another video. But for now, pay attention to this, okay? So you're looking for such. So you're looking for, you see how we're using that turning point, turning point, turning point, turning point. Very important, okay? Now let's look for such in the markets. I'll share one that my students, his name is DJ, shared with us, okay? This is gold market. So you want to look at this, okay? So you can see easily what's the market doing. The market is in an uptrend. Look at this. Actually, I'll show you 2. I remember this one that I took the other day, some over here, okay? So market is in an uptrend. So you want to be looking for correction. So the impulse is to the upside, okay? Basic analysis that I teach in my course. Where's the market impulsing to? Because you want to be trading in the direction of the impulse. The market is basically impulsing to the upside. Look at that. Impulse, 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 impulse. Now over here, once market had impulsed here, okay? I remember we got a flag here. Let me show you. So you come take your tool. Now these are my favorite tools that I use. I use this as my top here. I corrected that. Then I got that. Now you see that? Now remember, markets are not perfect. Like I said, how do you draw? Someone else used the body here. Okay? Look at that. You can use the body. To someone who used the body, okay, you can easily say market over here had broken my level. It was nullified. Then market started moving up. Lo and behold, if you used the long, like for me, example, I adjusted it. Because markets, when market was coming towards my entry, it was coming with a lot of momentum. So I kept adjusting it. So you move with the markets. At first it was here. If markets showed a sign of turning there, that would have been my entry point. But market kept on moving lower, lower, lower. So what did I do? I adjusted that. I kept moving it until the bottom of this week. Okay, I don't want to go deep because some other things that I normally do, you can also go to the lower time frame. The lower time frame can really help you get a better turning point. You can come and see that in the lower time frame, maybe in the 15-minute, this is a week. This is a body. Okay, so market came to this level. I got a buy there, and market went all the way up. Okay, another time. Now this is one my student shared in the group. So shout out to you, DJ Ruben. So he shared here. Okay, there. Now look at that. Perfecto. Market has impulse to the upside. We got this ABC. Like I said, markets will always move in an ABC pattern. Okay, so look at this ABC. We got an entry level there. Okay, now you're looking to buy markets as the market is going up. That was our buy level. Markets dangled a bit over here, moving sideways, eventually shooting to the upside. Market is now back to the 2000 level. So that was a very good level, okay? Now look at this one. I've not used perfect weeks, okay? So there's no perfection. I remember in the podcast the other day I shared, I was telling people, some things I can't really show you how to do. Some things just need a lot of experience. Once you've done a lot of trading, looking at markets differently, for example, like here, how did I know that I should move and buy here at the bottom and not up there where market was? I think it was experience. Other things you can look at, for example, why was I paying attention to the lower level? I was looking at this key support level. You can see this resistance level here. You can see that. Look how market was fighting with the market. Market was came, touch, came down, touch, came down, touch, came down, eventually broke to the upside. So for me, I was looking for markets to come there. To me, that was a liquidity zone. Okay. Now look here. If I use this upper point, okay, that means I'm looking for markets to turn here. Markets didn't come and turn there. If you look at the significant point, it was towards the bottom. That was the 1986 level. I remember that's the level I bought. I got the exact bottom. That was the level you want to be looking for. Look at this level that my student shared, because if you look at our charts, let me even show you. It's not my doing. It's his. Yeah, he shared with us. Look at this. You see that level? Liquidity zone. You want to be looking for that liquidity zone. It's a better support level for you to enter the market. Okay. So if I use this, here we go. You want to be looking for that level. Look at that liquidity zone. Market came rejected once, twice, and eventually shot to the upside. So these are things we're normally looking at. For me, markets move like a step by step. It's a step by step, and this is what I'll cover in the successful follow through towards the end as a bonus. How can you look for these points? Okay, I normally don't have long. I don't have long key levels. For me, you won't find me with long. I don't have key levels saying this level was respected back in 2010. I expect it to be respected now. To me, that doesn't. That's in my opinion. For me, it doesn't really make sense, because I remember, and I read this in a book. It was saying. The traders who traded in 2010 are not the same traders who are trading now. There are many people who quit along the way, and there are many new traders. That means there's no... when you're trading these zones, these are basically psychological zones. They had certain psychological impact on certain people during that time. So that's why when it comes back to that level, people want to be buying that level. They are like, oh, over here, at the last time I traded it, it was a very critical level. I want to be buying. If it goes below, I want to be selling at that level, okay? So it's a psychological zone. But I don't believe in a 10-year psychological zone. But that's in my opinion. I go with the markets. The markets move as a stairs, and there are always new traders coming into the markets, okay? So understand that and understand it deeply. So that's in my own point of view. So that's how I draw my key levels. I get into this in-depthly in the course. If you do the course, I have notes that I share with my students of how I look at key levels. For me, I call them launchpad levels. The levels that markets came and sort of like a rocket, it shot to the upside. Look at this level. It shot to the upside, okay? And I've seen that multiple times. So that's how I draw my flags, okay? Let's look at something like a triangle. Now, where can I find a triangle? There's one forming on USD card, okay? Now, this is, depending on the different types of triangles you're used to. Now, this is a different one, okay? There are three different types of triangles. Actually, four. I won't get into the fourth one because it's not really that important. But anyway, basic ones. Let's just look at a basic one. That's one. I'll cover it. Let's cover these two simple ones. Just simple, basic. There. That's a descending triangle, and then we have an ascending triangle. More or less mean the same thing. Remember, triangles, what do triangles mean? Triangles mean that the market is in indecision, so it's sort of moving sideways. The bears and the bulls are sort of in equality. They're not really deciding on which direction markets should go. So for example, if I now draw a triangle, looks sort of like this. Okay, this is a symmetric triangle. Okay, something of the sort. Okay, let me leave it at that. I don't show any breakout. Many people will say, Caleb showed me this one and it was to go up. No. Let me leave it there. I'll show you what that means. I remember when I started learning Forex, it normally said if a triangle is formed and the market was moving from the downside to the upside, just know you're coming to buy it. Trust you me, that's not how markets work. I tried buying such a lot of times and the market did the exact opposite. Okay, so there you go. That's an ascending triangle, something of the sort. Okay, so these are all triangles. Market was moving from the downside to the upside, did a lot of sideways movement, eventual break to the other side. So now this is what I tell my students now. And in decision, when market is moving in a sideways, it's sort of like a rectangular pattern, moving sideways. Anticipate a direction break of either side. It doesn't just mean because market was coming from a downtrend. There's a high chance, there's a high probability that market might continue to the upside. That's no lie, okay? Even if it's this one, even if it's a descending, ascending, you can easily see markets just shooting to the upside. But at the same time, do not discount the fact that markets can also move to the downside. It can do that multiple times. Markets will always do what the markets are going to do, and most of the time, the markets are going to fool you. So you're going to see markets just moving, okay? So in a nutshell, I don't cover that right now. I cover that in my classes. So there's something of the sort here. So let's expound on this. Now look, I want to show you two things over here. I want to show you the triangle that's forming and the sideways movement, okay? There were two triangles here. Not the sideways movement, but how market goes with the key levels that I'm talking about. Market's going to a new high, coming and respecting, okay? So let's take this bottom. Market bottomed at this level during February 23rd. Market started shooting to the upside. So we had this key level. Now look, now I normally look, how do I get my key levels? Remember, experience, but also looking for a level that market was respecting multiple times. So you're getting such a point, okay? So now you want to look for markets to break above that. When market breaks above that, you do not want to be looking for further sales, okay? Well, you can still look for them. I'm not saying it's a rule of thumb. Remember, that's what I said. It's not a law, okay? Anything can happen in the market. But what I'm looking at, you're looking at something of the sort. Markets broke above, came back down, respected that level, then moved to the upside. So market is always moving like that. And then remember, it's going to respect this previous one. So market came, created a new high, support, moved to the upside. Now look at this. It's not magic. It's just how the markets move, okay? Look at that. So we had that resistance, market broke above, respected it, went to the upside, came back, respected it. What did we respect? The previous level. Look at that, okay? It's simple, nothing. We make trading hard ourselves. Markets are quite simple. I'm not, and I keep saying this a lot, markets are not easy to trade, but they're quite simple. If you just use the simple rules, like this is a breakout. If you had sold here, just come out of that trade. Nice and simple. Now, human factors coming, we do not want to accept a loss, we do not want to come out of a loser, we're just praying it comes back down to entry, I'll come out. When it comes back to that level, you're like, no, this might continue going to my direction. We've experienced this, okay? Here, look, resistance, look at this. Look at this. That's no magic, look at that, okay? Markets respect previous key levels. For me, now these are my launchpad levels of my previous key levels. This is how I draw my key levels. I want to pay attention to the current key level that market is respecting, okay? Now, what was I talking about? Trend lines, triangles being formed. There are two triangles formed here, okay? We formed a symmetric triangle here, okay? Look at that, okay? Let me remove this. So I'm sure most of you have understood what I'm talking about with the key levels. These key levels being broken. Let me remove that one there for better clarity on this one. Okay. There, now you can see it nicely. Now that's our triangle, symmetric triangle. Market was moving sideways, and impulse to the upside. You see that clear break? Now this was more of a better signal. I like telling people, when you're looking at these sideways corrections, look for a breakout on that side and then trade that direction. It's more, for me, it's much better, especially when you're trading a ranging market, okay? I don't want to predict here and start saying, from this level I want to buy, it will go up. Yes, it can work. I'm not saying it's impossible, but do that 100 times, you'll be caught on the wrong side. Because over here, markets can also just move to the downside, okay? Now, market went up, came and started dangling around here. If you look at this closely, it's creating another pattern. So we have sort of a support here, okay? Support there, and then we have a trend line here. Now, what triangle is that? We've gotten these two perfect triangles that I've drawn up here. We have a symmetric triangle and we have a descending triangle, okay? Most people, if you read books are going to tell you when you see a descending triangle, market is going to descend. When you see an ascending, anything can happen in the markets. The markets are going to move. I don't have that analogy these days. Markets can do anything here. If it breaks to the downside, well and good, I'll short it. If it breaks to the upside, well and good, I'll go with the market flow, okay? So that's what you want to look at. Now look at this. Something important. If you looked at the market a few hours ago, this market was strongly breaking below. What did people do? Start selling. Now remember, okay, and I insist on this a lot, and I'm even writing an article on it. I used to really not pay a lot of attention to candlesticks. So when this market started breaking like this, I wanted an early entry. What did I do? Already sold. Look how market has closed now. This has changed the whole story. This has changed the whole narrative. This is not a bearish signal. This is a very bullish signal, okay? Until market closes below this level, okay? That's what I'll wait for, until it closes below. If you go to the 1 hour chart, okay? Let me just make sure this is visible on the 1 hour, because I want you to see something. On the 1 hour chart, you might see that the market had broken, okay? Because this is the 4 hour chart we're looking at. Yeah, exactly. Here, look at that. Look at that. So here, market had respected. So you come and tell me, but Caleb, on the 1 hour, market already broke below. And then it's stopping me out. It's coming back for my stop loss. Maybe even some of you are in this trade. I'm not sure. I don't know if you trade These ones, okay? But but this was a trap. This is normally a trap. Now this is what I call failed follow-throughs, okay? They're normally successful follow-throughs and failed follow-throughs. Now I like paying attention to the bigger time frame. Like what I'm saying, there's more significance to the bigger time frame. For 1 hour you're fooled, 4 hours it's a totally different story. So that's another topic I'll come and cover, how different candlesticks can affect your trading differently. That's important. Over the years, I've done that multiple times, and it's very important to pay attention to it. So anyway, so you're getting my point of how to draw these levels. So now someone can ask me, Caleb, why not using the bodies? Okay, now the bodies there, you can use the bodies, okay. Caleb, why not using the wicks? Okay, Caleb, I've used the wicks there. Caleb, why not? So there's no one way to do this. Over here, look, I've used the highest wick. Then over here, I've used the bodies. I can squeeze it to use the bodies like that. I can squeeze it up to use the wicks. You're looking at the wicks. Look at this one. I used the wicks, the wick, the body. I didn't go down to the wick here. Okay? So I hope you're getting what I'm saying. There's no one way to do this. There are multiple ways you can look at it. At the end of the day, look at a significant time frame that you want to be trading and pay attention to it and understand it. Okay? So that's on my point number 2, how to anticipate and draw patterns. Now, I think I'll cover the anticipating another time because of time. It's another different, because you have to be looking for an impulse, then you're looking for something in the correction that is normally forming. Alvin, you're drawing on my screen. Maybe you can correct that. Anyway, so you can get this. So that's what I mean when you're drawing all this. So I hope you've gotten the gist of that. Now remember, time frames can discount a pattern, and that's exactly what I've shown here. A time frame can discount. For example, look at this. The 4 hour, this is a what? This is a good pin bar. But on the 1 hour, we had a good breakout. Okay? So the 4 hours easily discounted what was happening on the 1 hour chart. Easily. It's discount. This is a bullish. Look, that's why the market is going up. People have bought at that level. It's easily discounted, okay? So depending on the time frame you're trading, it's important to pay attention to that. Pay attention to what is the market telling me, not what you think the market is telling you, okay? So that's important. Pay attention to that. So any time frame can discount a pattern, any time frame, and that's what I mean.